If I look at the gold above ground supply and the known reserves and apply that to Bitcoin, so it's called a stock to flow, I said, I think Bitcoin's worth $1 million with gold at 1,300 at the time. I then also said, oh, and I'm also an idiot, so I'll discount myself by 90%. So let's assume 100 grand is fair value. And it was $200. So I'm like, this is the best reward any of us are ever going to see in our entire careers. And everyone got it. But that's my global macro investor audience. These are sophisticated investors. So cut to the first video on Real Vision when we mention Bitcoin, and it's like, it's a scam, it's ridiculous, you need to own gold. Remember, gold was at $1,300 back in 2012. And where is gold today? Just double checking. Gold today is $1,600. Bitcoin was at 200, and now Bitcoin today is at 20,000. But, oh God, on Real Vision, we got such pushback. You know, this is ridiculous. How dare you? But the macro guys know there's a bunch of people who just didn't like it. And over time, I've been, as you know, very strong on this. And over time, people have left Real Vision because they didn't share that vision. But, I think it proved pretty well that macro and crypto are all different facets of the same thing. One is the future of money and the future of the financial system, and maybe the future of all business models. And the other one is the decaying system. And that kind of pessimism, optimism actually works really well. It gives you lots of opportunity sets.
I mean, you long the pessimism, which is the US dollar when everything is bad, and then you long optimism, which is like Bitcoin when everything is, when the flags go off again, right? And
yeah, but don't forget, the flags go off when everything. But the flags go off when everything's really bad. So that's why all the macro people are watching the bond markets fall apart, the economy, and everyone's slightly cheering because we know what comes next. Bitcoin, the largest driver of Bitcoin in the cycle. So if you think about that technology, that gives it this exponential uptrend. So if you put a logarithmic chart, it's actually pretty smooth. What are the cycles driven by? It's driven by liquidity. The biggest driver of Bitcoin is global liquidity, not just the Fed liquidity. So if you use the global bank balance sheets year on year, what you find is that's the thing. So China's already starting to print. The UK is starting to change. I think Europe will be pretty soon. So I think that all we need is a turn. The rate of change needs to turn, and crypto turns, which is why, ETH bottomed in June. It's been looking forwards, saying the cycle's turning, and I think it's right. So I think the cycle's turning. And it takes a while to play out. So people would call this crypto spring. Spring is a time where, it rains a lot, it's cloudy a bit, sunny a bit, it's cold, it's warm. And that's exactly what the crypto market's like right now. It's just messy. But it's not really going down either. So it doesn't get colder every day. That's winter. So I think we're in crypto spring. And as the liquidity changes, and I think that happens relatively soon because things are getting pretty ugly out there. Nobody gives a shit if the hurdle rate's 6%. Look at the hurdle rate in India. Look where Indian interest rates are. Where are they today? 7.5%. So 7.5% rates. And how many entrepreneurs have you got? The entrepreneurs in India are going exponential. So it's a nonsense narrative that raising interest rates means that nobody does technology. Go back to the 70s. There was plenty of technology companies like Xerox that took over that period of time. So I don't believe that. I think the adoption of technology is exponential. Increase in number of holders per year is faster than users of the internet in terms of growth from the first 5 million users. That's where I took it from. So crypto's still great. This year will be a much flatter year, but it was growing at an average at about 160% a year, and the internet was growing about 80% a year. It's twice the speed. So we have never seen a technological adoption as fast as this. And so does interest rates stop that? No. Change in interest rates is the thing that stops it. That liquidity, remember, it's year-on-year rate of change. If they just stopped interest rates, if the US stopped interest rates here, over a while the rate of change goes flat. Assets can do fine in that because remember, it's technology adoption that actually drives the price over the longer run. So it's the rate of change that's causing it. If the rate of change goes to zero and it flattens out, i.e. interest rates stay sticky, then the chances are that we just get the trend rate of adoption of the technology over time, which still gives it 100% a year rise. saw very clearly what was going on with crypto, I wanted to make the biggest bet of my life. That's with my time and energy into this one thing. So I knew that, okay, Real Vision was moving more towards Web3. Global Macro Investor, I write about it. I still write macro, obviously. But I wanted to make two big bets. Going back to this story of how young Indians should think about finance, I just took the same thing. What is the secular trend here? One is all the institutional investors, all the rich families, everybody's going to come into crypto. Right now, it's too difficult for them to do. They don't want to go and, figure out wallets or custody and all of that. And it's becoming more complicated. It's not just a Bitcoin world anymore. It's a complicated technology world. And we're all feeling a bit dumber every day as this space gets smarter and smarter. So I thought, how do I solve this? And I thought, what we'll do is we'll create an asset management company that invests in the world's best digital asset hedge funds. So let the hedge funds focus on what they do, which is finding the best opportunities in the space. We'll build a broad basket. So now big investors can come in. And that's the start of the asset management business. So that's one bet. Everybody in finance is going to invest in this space. What's the other bet? The other bet is, everybody's going to be using blockchain technology. It's going to change the world. And it's going to be a consumer application of massive scale. Because if I extrapolate the trend rate of growth, we get to about 4 billion people in the next 5 years. So this is going to be another Cambrian explosion. So what are those use cases? So I had a thesis that culture is becoming the new asset class. So this is culture and community. And where those are strongest are music, sports, film, TV, book franchises, and fashion. Now, there's probably religion and politics. We'll leave those two out. But those four apply to somebody in India, somebody in South Korea, somebody in Brazil, somebody in the United States. And they are at a gigantic scale. So I think they're going to be tokenized using both a combination of NFTs and social tokens. And if I think the next billion people come into that and the next $1 trillion comes into the finance bucket to fund all of this, well, I want to capture both of those. So this is the biggest bet I've ever seen. It's the most intellectually rewarding thing I've ever done. It's a whole load of fun. So I'm now working stupidly 14 hours a day, like 7 days a week, but I've got a grin on my face and endless energy from doing it because these times are magic. They happen once or twice in your entire life when opportunity is everywhere. It's not easy. It never is easy. Opportunity is everywhere. You've seen it and you go for it. We as humans understand some of the fragilities of the system. Humans' two strongest emotions are fear and greed. Crypto works for both of them. Fear is, I want to keep my money. I don't want it taken away and I don't want it debased and I don't trust you. And greed is, hey, this is a perfect behavioral economics incentive system where if we all participate in the network, the value of the network goes up. So this is a very powerful force. Imagine if Facebook, when it started, so Facebook works by giving you a bunch of free tools, monetizes your attention span, and the shareholders get rich and you kind of get abused, but you get the free tools. So it's a trade-off.